Welcome to day 23 of your 30-day Dental MBA. This is going to be an extremely important day. I would say if there's probably the most important day is today if you just bought this for simply practice management business. Day 22, the driving point I was trying to drive home, and I hope I did it, was you have got, on day 22, understanding managerial finance, you have got to force yourself to become interested in these publicly traded companies just so you understand real yardsticks, okay? Real measurements. I listen to all the practice management lectures. Everybody has all these yardsticks pulled out of God nowhere. One guy says he has 50% overhead, but the doctors pay $350,000 for the partnership, and they're paying that over 10 years. They don't say how this is depreciated or amortized or cost of capital. I mean, the world has to agree on standards. The standards are set by the Financial Accounting Standards Board. If you would go back and get your MBA Mondays and Wednesdays from 6 to 10 for 2 years, Tuesdays and Thursdays from 6 to 10 for Saturdays, if we could get 10,000 dentists to go out and get their MBA, this can be a highly efficient industry. In fact, the number one threat to publicly traded dental companies, HMOs, Delta, the American Dental Association, the number one threat to everything is you guys getting your game together. If you don't get your game together, the ADA doesn't have to have, they don't want your vote. Publicly tradeds will expand like Walgreens, Delta, HMOs, PPOs, do whatever they want. You don't worry about any externalities. Don't try to sit around with the crystal ball, predict inflation, government, the Hillary Rodham Clinton plan, whatever. Just focus on your game. And from day 22, you need to get your dental office incorporated. It gives yourself a lot of protection from risk. It allows you to move the shares into your trust. It allows you, what is probate? Probate is how you're trying to hand down your wealth to the next generation without giving all of it to the government. It helps to be incorporated. By age 40, if you don't have a family trust, if you're not incorporated, if you don't have life insurance, and you haven't made a long-term relationship with a national broker, with someone like AFCO, which Alan F. Thornburg is the founder, and he's done over $1 billion of dental sales, dental acquisitions, mergers, the whole 9 yards. Get your game together, okay? After you learn how to get incorporated, and you got a 10Q from all the publicly tradeds, now you can start having your accountants and your CPAs organize the information, and you can start benchmarking it off the majors, okay? And you got good data, you got data the truth. All the measurements are set by the Financial Accounting Standards Boards. You know it's the truth, or the SEC is going to throw them in jail or fine them big bucks. Once you get the yardsticks, now we'll go into managerial accounting and continue. First of all, a little bleed over from managerial finance. Number one is there is general agreement that average returns should increase with risk, okay? So you have your average return. As the risk increases, so should your return. But how should risk be measured? At what rate does the line slope up? Is the relationship linear? Let's look at some key historical evidence. When we go back and we study a dollar investment in different types of portfolios from 1926 to 1994, basically starting with dollar, we see that basically a dollar invested from 26 to 94 in inflation would have been $8.35. Treasury bills would have been $12. Long-term government bonds would have been $25. Large company stocks would have been $810. Small company stocks would have been $2,842. How do you determine price? Well, there's two ways to determine price. In Wall Street, price for your dental office is simply what someone's willing to pay for it. That's how they figure the value of your home. That's how they figure the value of your car. I mean, if you got a car with 100,000 miles on it and you think it's worth more than what you paid for it, you'll be pleasantly or unpleasantly surprised when you go to sell it. But Wall Street is, right now, it's sitting at about $12 trillion in value. It's so liquid, price is determined by the dividend it's paying out, or the value of the stock that's appreciating, or whatever, cash flow is appreciating, what they would paid out, divided by the discount rate. So if you got a $2 dividend, this is why everybody wants to know so bad what Alan Greenspan's going to do with interest rates, or what Paul Volcker was doing with interest rates. If you have a dividend and the discount rate's 10%, your stock's worth $20. If your dividend remains still at $2, but the discount rate drops to 0.9, your stock went up to $22. If your dividend's $2 and discount rate drops to 8%, it goes up to 25, 7% goes up to 28, 6% goes up to 33, 5% goes up to 40, 4% goes down up to 50, 3% goes up to 66, 2% goes up to 100, and we're down to 1%. Your stock is now gone to $200. So as the discount rate's gone from 10% to 1%, your stock's gone from $20 to $200. You could also figure this another way. What if your dividend was $2 and the discount rate remained constant at $5, but the dividend starts going up from $2 to $3. Same thing, the price of stock from a $2 dividend to a $3 dividend, the price of stock go from $40 to $60. So that's how they figure the price of the stock. And the most important thing to realize is as interest rates come down, dollars are worth more, okay? Dollars are usually nominal. To make them real, are you talking about a nominal dollar or a real dollar? If you say that your company now made 10% more profit this year, but there's 10% inflation, it's a wash. You keep hearing all this about beta. What is beta? What determines beta? Beta is a measure of sensitivity to the market, okay? Companies with cyclical cash flows will tend to have higher betas. Higher operating leverage implies higher betas. Higher financial leverage also means higher beta. What we mean by beta is this. If the stock market goes up 1 point and your stock goes up 1 point, you have a beta 1. If the stock market goes down a point, your stock goes down a point, it has a beta 1. If the stock market goes up 1 and your stock goes up 3, it has a beta 3. If the stock market goes down a point and your stock goes down 3, it has a beta 3. So what beta is, it's a measure of volatility. Basically, it's a statistical aberration. And if you diversify among enough stocks, you can get your stock to reflect the market. Basically, it's an index fund. It's about diversification. Get an S&P 500. Get a Vanguard 500, get these index funds. If you want to eliminate risk, beat 70% of mutual funds, just get an index fund. I don't know about government bonds. When we started earlier, we said that a dollar invested in 1924 turned into the most money was small stocks. Well, what happens to pay for that? That means just because small company stocks average a 12% return, let's go back to that study and say, okay, inflation was the mean on inflation was 3.2. Treasury bills, the mean would have been 3.7. Government bonds would have been 5.2. Long-term corporate bonds would have been 5.7. Small company stocks, 17.4. Common stocks, 12.2. What does that mean? That means that they have a big deviation. Sure, small company stocks yield a lot higher return, but for every guy that got a really, really high return, one guy lost all of his money. So remember, you pay dearly. Risk equals reward. We're back to normal distribution here. An index fund, simply like a Fortune 500, you're just weighted among the Dow Jones Industrial Average or the top 500 or whatever. What you're doing is you're diversifying your risk, and by not having to trade and sell and pay taxes on gains and not having all these stock commissions, you are going to beat 70% of the mutual funds. So what is beta? It's a measure of the sensitivity of a stock's return to market returns. It's a measure of a stock's systematic risk relative to the average. It's a measure of the contribution of this stock to the risk of a diversified portfolio. I'm going to go back to another thing about return on income. You keep having all these people tell me, well, my overhead's 50%. Well, what does that mean? That's an artificial yardstick. Let's say you bought a company for a $100 investment. It did $100 worth of sales, and it netted $10 of income. So you have $10, and remember, net income over sales is your profit margin. So you have $10 in net income over $100 in sales. So net income over sales is 10%. Okay, so you have a 10% profit margin. But what if you had $100 of sales, and it gave you $20 in net income, but the investment cost $300? See, what is this overhead thing? It doesn't factor in what did you pay for this office. You said the office has a 50% overhead, but someone has to walk in there and pay $350,000 cash for it. Now there's $20 in net income over $100 of sales, so $20 in net income divided by what the investment was, Now I have a 6% return on investment. So the trick is, a trick on this, look at A or B. Would you rather buy a company that had a 10% profit margin or a 20% profit margin? All these dentists say, well, I'd much rather have the company with a 20% profit margin. Really? Well, that was true if both dental offices cost the same amount of money, but if one costs $100,000 with a 10% profit margin, that's a 10% return on your investment. The other one's a 20% profit margin, but a $300 investment, you only got a 6% return on your investment. So get real legs. Abraham Lincoln said a very famous thing, how many legs does a dog have if you call his tail a leg? The answer is 4. Just because you call a tail a leg does not make it a leg. Okay, that's honest Abe. What did Maslow on management? By the way, Abraham Maslow, in my humble opinion, is the greatest psychologist ever lived. I think he's greater than Sigmund Freud or Herman Rorschach. I think Rorschach and Freud were just the first guys on the scene. I think Abraham Maslow is the greatest. That's why it doesn't surprise me that Gordon Christian, Gordon Christian, DDS means he's a dentist. MS means he's a prosthodontist. But what is Gordon's PhD in? Doesn't surprise me. He's got a double doctorate, and the other one's in psychology. Psychologists have the most keen insights because all of life is a people game. Abraham Maslow says the limitations of accounting systems are, I'm going to dictate sometime soon, he says, my thoughts on how stupid our present accounting systems are because they leave out practically all the important personal, psychological, political, and educational intangibles. Like I look at all these publicly traded dental offices. I look at their 10K annual reports filed with the government. Not one of them tells me how long does their average dentist stay there. What if we had 10 dental companies all doing the same, and one had their doctors only stayed there on average a year, so basically it was just a place to work for a year out of dental school until you found a good job, and another place their average doctor had been there 10 years. One over the long run is going to create massive value. The other one is crazy. Warren says, in the Essays of Warren Buffett, your business represents the creative work of a lifetime and forms an integral part of your personality and sense of being. Okay, if you can't attract and retain quality key people, taking lots of continuing education, you're not valuing for the long run. If these publicly traded, so I had 2 publicly traded companies, one had all their staff turned over every year, they took no continuing education, and the other one, they had their staff on average for 5 years, and the average staff member took 30 hours of continuing education a month. I know where I would make all my money in the long run. Harvard has another one called the balanced scorecard approach. If you can't measure it, you can't manage it. Balanced scorecard links your mission, your strategy, your destiny into objective measurements. Measures as tools to articulate business strategy versus to control, typically aimed at strategic business units. Now, your dental office, it only has one strategic business unit, so your dental office is your strategic business unit. What is a balanced scorecard? What does the balanced scorecard measures? 4 different perspectives. It has the financials, the customers, internal business process, your operational logistics, and learning and growth. It's one thing that I have 2 companies with similar financial statements. But what if one company got 20 new customers a month and kept them all? The other one got 40 new customers a month and lost them all. See, we got to know the financial statements, but we got to add more value. What about the customers? What about internal business process? Does the staff see light at the end of the tunnel? Or do they think the light at the end of the tunnel is another head-on train and no one cares, no one wants to get involved, nothing ever changes? And number 4, most important, learning and growth. Are they taking continuing education? Are they growing? Are they going to LVI's Dickerson, Hornberg's UAP? Are they going to Brock Rondeau learning how to do ortho? Are they going to Carl Misch learning how to do implants? Or are they going up to Gordon Christian's 2 days a month and doing all of his PCC courses? Is this a long-term learning, growing, healthy, where they're maintaining the office staff's morale, the customer's morale? That financial statement, according to Warren Buffett, is going to vastly exceed a financial statement where the customers are demoralized, there's no internal growth, there's no learning, it's just everything's in chaos. And one of the easiest ways I can invest a lot in these publicly traded is because I'm lecturing a lot. And when I'm lecturing, I had 2 things going. I said, has anybody ever worked, I'll be in someone's hometown. I'll be in Dallas where Monarch lives, or I'll be in California or General Dental, or I'll be out in Florida where Coast is. I'll say, has anybody ever worked there? Has any dentist ever worked there? Will you please see me at the break? And some of these companies, they come up to me and I'll say, what'd you think? Oh my God, complete chaos zoo. I mean, people pulling their hair out. Other ones like, oh yeah, I really, really liked it. And then now I've been watching these guys since about 93. I've got about 5 years of data on a lot of these people. And every single one of these people where they're like, you know, it's a really nice place. Well, I want to get on my own. Or I was there 3 or 4 years. It was nice. Versus the ones that are saying, oh my God, it was crazy. No one knew what was going on. It's crazy, it's crazy, it's crazy. Some of these deals are trading now at 20% of their initial IPO price. Okay, so you can't hide baloney in numbers. Your monthly scorecard. You got to have a scorecard for your whole staff. You got to summarize your 40 soft dent reports, your 20 Peachtree accounting reports, all your reports. Come down to a monthly scorecard. Sally McKenzie helped me design mine. We have her in her office once a year for 2-3 days. It's a hell of a value. But, you know, new patients this month, year to date, monthly goal, monthly production. What is our daily average doctor production, daily average hygienist production, monthly collection? Our daily average production for the whole office is 10,000. For hygiene is 2,700 of that. Our monthly collection ratio is, you know, our goal is 98% a month. Total account receivables is less than 1 month. Receivables over 90, our goal is that it's less than 15% of total account receivables. Receivables greater than 90, that is an insurance. That's a very cyclical deal depending on the insurance companies, if they're jerking their chain that month or paying their bills. Receivables over 60 days, our goal is that should be less than 30%. Receivables greater than 60, insurance, I really don't have a goal, that's cyclical. Adjustments to accounts, patients, portions, and non-insurance collections, attrition scores. How many people do we know we lost last month where we had to mail out their x-rays or they called us up and said they quit? Number of cancellations, openings and hygiene schedules. I got to have capacity. I can't run a hygiene department that hasn't had anybody in the where people are calling up all day and no one can get in. Profitability scores, hygiene production, percent perio. Now, I don't like these. I'm having some run-ins with my staff on these. A lot of experts are saying that hygiene production, 33% that should be perio. I don't like goals like that. They make me mad because what if 100 kids come in with no cavities, no gum disease? And our goal is that 33% of them have perio. I have a hard time setting a goal for disease. I mean, that's like saying, yeah, I'm an oncologist, and my goal is that 30% of my patients are dying of cancer of any month. But the hygienists like is they like to benchmark it off the experts in the field, kind of like a Delphi method. Wages as a percent of income, goes 25% or less. But remember, I'm counting FICA matching, workers' comp, profit sharing, 401k, continuing ed, uniforms, name tags. Every dollar I dump into you, I put that as wages. So if I wanted to sit there and take out profit sharing, I could drop that an easy 5, 6, 7%. I got that under 18 if I just take out profit sharing. Lab fees as a percent of income, our goal is it's under 10. Sundries percent of income, our goal is under 6. Now remember, when we look at accounting, that accounting falls on a continuum. It starts off with financial accounting. That's where accounting really got its start. 1929, the New York Stock Exchange crashed. There was a lot of cooked books, a lot of phony bullshit. There was finally a liquidity crisis. What triggered the 1929 stock market crash is still under debate, but I don't think it's debate. I've read everybody's arguments. I still believe it was that basically it was starting the Department of Immigration in 1918, and what happens is that until then, any talented, smart person who wanted to leave a crap hole monarchy back in Europe, around the world, that drained brain to the United States. And with this nice supply of new people who needed new houses and new cars and new everything, and finally the goddamn Democrats got enough power to start setting up unions, to start blocking, everybody wants to use force or coercion to limit competition. No one liked these immigrants coming in because they would work cheaper. And then a bunch of idiots all got around and they said, well, these immigrants are coming in, they're working for cheaper. And then you're stupid enough to say, oh, well, that's bad because then you'll make less money. And then 99% of everybody turns around and pays more for all their stuff. I mean, you can't keep having higher and higher wages. It's a balance between higher wages and everything being less expensive, just like profit. Profit is the difference between how much we're collecting versus our expenses. You push down the expense. Here's what it looks like. If you push down expenses you increase your profit. If you drive up collections, you increase. You got to spread the lines. Well, what happened is waves and waves of immigrations would come in here. They'd work for cheaper. Well, what does working cheaper mean? It means that the average American pays less for all their goods and services. You know, when all the Americans get together and say, well, you know, the pilots are on strike because, you know, they're getting screwed by a corporation and greedy profit holders. So the public's dumb enough to support this, and then they want to know why they can't afford to fly. Did you know the average dentist makes $122,000 a year, has 8 years of college? The average pilot makes $125,000 a year, and he's basically flying a bus that's all automatic. Hell, all they do is wake him up for the landing, and that's just so he can go to the bathroom and get off when you do. Okay? Well, when these pilots strike, can I have a hot coffee, Sam? When these pilots strike, okay, or when people go on strike, when the poor and the middle class support their efforts, I mean, it makes me less hard. Here you are, you're poor, you can't afford anything. So what do? You support the guys on strike because they want to make all your goods and services more expensive, and you think you're siding with the worker against the owner. There's no class warfare. Let me tell you something about the rich and the poor. We'll always be rich. You'll always be poor, okay? You're poor because you make low-quality decisions. If you think a bunch of dumb people are going to get around and screw the rich, it's never going to happen. No matter how you change the monopoly game, the rich react. And we react faster than you could ever come against us, because if you knew how to play the game, you wouldn't be in your lot in life, okay? You cannot, when the government shut down Department of Immigration, what happened? It crushed long-term aggregate growth. Finally, all these companies that were building X number of houses, X number of railroads, X numbers of growth, finally the growth wasn't there, so everybody reevaluated, the books were cooked, and the whole thing collapsed, and it made the 1932 to 1936 Depression, where unemployment was 25%, 1 in 4. So what happened in 1929? The Securities and Exchange Commission came out for outside investors, and they started setting up laws. They based the laws on the private sectors, the accountants equivalent to the American Dental Association or the American Bar Association or the American Medical Association. The Financial Accounting Standards Boards had what they thought were their rules based on their ethics as they saw their profession. So the government SEC stepped in and adopted their rules as law. And so financial accounting gets its start. If you look on the diagram to the right, look on to the right of the diagram. So the financial accounting got its start for IRS outside tax collectors and the SEC outside investors. These are the reports you still look at. Well, these reports are for outside investors and outside tax collectors. They don't give you any data for a manager. I mean, as a manager, you're in there, you know, when an airplane takes off, it adjusts its course about 95,000 times a minute until it finally lands on an X. Well, your financial accounting reports, the reason you don't read your balance sheet and your statement of income and your profit and loss, because they're not giving you real reports where you're changing knobs to get your game together. The far other end of the spectrum is what we call managerial accounting. That's activity-based costing equals activity-based management. We have to measure the variables of what's changing. Now, the first thing you have to do is you have to start doing your own math. I am a firm Microsoft believer because he's the richest man in the world. He's a huge, formidable competitor, and he's very young. This guy's going to be in the game for a long time. I made the mistake of going into, gosh darn, Macintosh. I'm the idiot who had 17 Macintoshes in my office until they finally didn't even make dental software that fit it. In fact, the only good thing that came out of that is some kindergarten class got 17 Macintoshes, and you know, I got burned once by doing that. You go into a Unix system, or you go into Java or these other formats or whatever, and why don't you bet on the Trojan horse? I don't care if you like Bill Gates or not. He's creating standards. He's creating wealth. Everybody's on the same platform. Just like everybody, how many electronic devices can you buy if every city you went to had different amount of electrical power? By creating standards that all railroad cars, all railroad tracks will be this wide, all streets will be this wide, all bridges will be this high, everybody will have electricity at 110 or 220, and now everything's on Microsoft Word, Microsoft Excel, PowerPoint, publish your layout for your newsletters, email. If you don't have email in your dental office, where are you? Microsoft Money, the Microsoft Money, that's pretty lame stuff. I get Peachtree. U.S. unemployment from 1890 to 1990 has been all over the board, depending on what causes unemployment. Mostly, it's how much money the government's printing, and it screws up market signals. But right now, after gosh darn Paul Volcker finally put an end to this, and he's followed by Greenspan, we're looking pretty good for a long time. What is the labor's share of national income? This is an interesting phenomenon. You know, from 1940 to 1995, labor's share of income is always ran between 62 and 74%. The last 10-year average has been right at about 71%. So I don't know who the poor people are, forget the poor, okay? Look at the middle class. The middle class basically gets about 71% of all the money. Where does the class warfare come when you look at the data? Profit share of national income is pretty much anywhere between about 14 and 8%. So profit in a business can be somewhere between 8 and 14% on the aggregate for the whole nation. The United States is the most productive workforce in the year because we have the most technology. In the 70s and 80s, everybody thought they were going to save a lot of money by moving their plants to third world countries. You'll find out that when you go to a third world country and the guy has pernicious anemia, he has scabies, he has worms, the only tool he has is a rock and a stick. It's pretty hard to make devices, especially pacemakers, cars, planes, trains. The United States is still, I believe it was, the 11th year in a row we've been the most productive workforce yet. One of the reasons are because we work the most hours. We almost average about 2,000 hours a year. Japan's number 2, Italy's number 3, Netherlands number 4, Britain's number 5, France is number 6, Germany's number 7, Sweden's number 8. I show this graph on there for one reason. Every practice management lecture I've ever gone to continues to say that the less hours you work, the more money you make. You know what they do? In fact, Rick Kirshner said a joke to me the other day. He said, all you got to do to be a full-time practice management expert and get invitational to speak everywhere in the world is 2 things. Suck up to the ADA and tell the dentist whatever the hell they want to hear. In fact, what you do is you just survey. You just ask the ADA, what would you like me to say about you? And then ask all the dentists, what would you like me to tell you? And they want you to say, well, that if you do Vicodin, hump the help, and never work, and stay drunk, that you'll be a millionaire. Okay, well, if you want to be the most productive dentist, if you work over 40 hours a week, you're going to make plus 140,000. You work under 32 hours a week, you're down to 85. The United States is the most productive workforce in the world because we almost work 2,000 hours a year per person, while Sweden's down to 1,500. How could Sweden keep up with the United States on a per-person basis when the average worker works 500 hours a year less? Hell, that's 25% less work. We are workaholics in this country. Average vacation days per year, United States is lowest. The average American takes off 10 days a year. Japan's 10 days a year. South Korea's 10 days a year. Netherlands is 20. Britain's, gosh darn, 23. Germany's 24. Sweden and France are 25. Italy's 26. Same thing in dental offices. I'll go up to dentists and I'll say, well, why are you blue? Well, June, can you believe it, Howard? I can't believe it. He's almost ready to cry. I lost money for the month of June. I'll say, what happened? Well, the month started out good. You know, I went fishing for 3 weeks. Then I came back, worked my week, and god dang it, I lost money. You know, there's a high correlation between not having time off and working a lot and making a ton of money. And what I don't understand is that the expectancy theory, you thought that if you went to 4 years of college and made straight A's and B's, got into dental school, med school, law school, and made straight A's and B's, now you graduated a doctor, dentist, or lawyer, you'd be rich, okay? All that gave you was a permit. At graduation day of medical school, dental school, and law school, all you did is you got your permit. Now you can go to work. All the lawyers, doctors, dentists, look at Dr. DeBakey. The son of a gun is 91 years old, and what does that son of a gun still do? Guy's on like his 4th marriage, and he still does a gosh darn bypass every gosh darn day. Look at Gordon Christian. You go by CRA at 5 o'clock in the morning, he's there. You drive back by 11 o'clock at night, he's still there. He tells you during his lectures, yeah, I like to ride horses and this, that. I want to see him at a horse. These guys are workaholics. Omar Reed's a workaholic. Rick Kirshner's a workaholic. Their wives are workaholics. I mean, I don't have a hobby. I don't even own clubs. I live on a golf course, And I golfed at one time. That's because I felt so guilty, and my cousins and my uncles in Phoenix, they kept bothering me, and oh, you got to do it. So I did it one time, just say I did it. I only lasted 3 holes and quit. I don't want to golf. I don't want to do anything. I do this. And if you want to sit there and you want to have your staff members sick 20 times a year, just give them 20 sick days a year. However many days of sick days you give them is how many days they show up sick. Same thing with all the studies on unemployment. If you give them 20 weeks of unemployment, it takes them 20 weeks to find a goddamn job. You take away unemployment, it takes them a day. Okay? Why do you reward people? You know, if you quit your job, or you get fired from your job, and you find a job an hour later, do you get a reward? Oh, no. No, you just get a job and you make $1 that day and the government steals half of it. But if you can't find a job, reward. Government steps in. The Democratic Party says, hey, you're like us. You're dysfunctional. Here's a reward for not finding a job. You graduate from high school. Do I get a college scholarship? No. See, you made straight A's, so you don't get anything. But see this girl over here? She's 14, she's pregnant, and she can't find a job. So let's give her a wheelbarrow of money. Take away dysfunctional incentives. If you flip a switch, and it should shock you, you need shocked, okay? United States has the least number of vacation, 10 days a year. And so keep your office open. Here's another thing we kick butt in. Women at work. Italy, only 43% of women work. South Korea, it's 52. Netherlands, it's 58. France and Germany, 60%. Japan, 61%, Britain, 65%, the United States, 7 out of every 10 women work. The only country that beats us there is Sweden. And that's because it's so goddamn cold, they're so goddamn bored, and there's so much overcast, they just want to get the hell out. They're probably having suicidal thoughts at home. That's how you control the overhead with your manager. Remember, there's you, the shareholder, there's you, the dentist, getting the opportunity cost. But there's also the corporation. You know, when I say work all these hours, you're like, well, I don't want to work all these hours. I'm talking about the corporation, your dental office corporation. I want it to work. I want it to never close. I want it to work more than 2,000 hours a year. I want it to work 4,000 hours a year. If I got to pay all my bills, fixed overhead, rent, mortgage, equipment, build out, electric, phone, advertising. Go back to the screen here so you can see this. Fixed overheads, rent, mortgage, equipment, build out, electric, phone, advertising, malpractice, computer updates, insurance. Say this schedule. Say you're on 10 to 7, Monday and Tuesday, hour off for lunch from 2 to 3. Wednesday, Thursday, Sunday, 4 hour off from 12 to 1. Working 32 hours per week in solo practice utilizes your fixed overhead just 20% of the time. By bringing in an associate, remember the average graduate in 1990, the 50th percentile dentist didn't get in their own practice for 6.5 years. By doubling it to 64 hours a week, now your fixed overhead is utilized 40% of the time. So what did you just do? One strategic move, and you cut your fixed overhead per operatory hour completely in half. That's why solo practicing dentist is in a massive headstrong headwind and has been shrinking every year since they first started recording in the percentage. And 32% of dental officers are now group practice. Physicians just passed the 50th percentile mark for group practice in urban areas, okay? And one of the reasons here is scales of economy. And dentists who want to own their own practice, when they go on vacation for 2 weeks, they have no freedom. I mean, you say you want to own your own practice. Why don't you say you want a ball and chain? Why don't you say you want to go? I mean, why do you want all these limits? If you love it, that's good. Some of us dentists love it, and we should be running these helms. Some of us don't love it. Decide for yourself. Are you qualitative? Are you artsy-fartsy? Are you quantitative? You know, do you like the golf? Do you like free enterprise? I would rather read a 10K annual report from any company from the New York Stock Exchange to throw a dart than play golf or go to a basketball game or watch the gosh darn Super Bowl. I have yet to watch more than 5 minutes of a football game. Maybe all the cheerleaders were butt naked. I'd give it a try to halftime, but I doubt I'd make it. Today's dental office hours. Right now, the traditional dentist office hours is open for business from 8 to 4, close at lunch. Today's dental is open from 7 a.m. We used to go to 8 p.m., but it's hard to staff. When unemployment's down to 3%, it's hard to get staff to work till 8 p.m. and all that. But right now, we're open 7 to 7, Monday 7 Monday through Thursday, 7 to 4 on Fridays, 9 to 3 on Saturdays. Now, let's stay on here. Let's look at total cost. Okay? You got to know your cost. Fixed cost, you pay your cost. monthly. Doesn't matter if there's 28 days in February, or 4 months with 30 days, or 7 months with 31 days. If you pay your cost 1 unit at a time, then basically the more you are utilizing that cost by keeping your dental office open, you stretch out your fixed costs, which per operatory output drops lower and lower and lower. Well, until that drops below your unit variable cost of labor, lab, and sundries, you're not even in the profit zone. If you're open 16 days a month and you say to me you have 50% overhead, you know what that really means? It really means that it took 8 days to pay all the bills. And then what do? Then you stayed open for 8 days. Well, if it took 8 days to pay all the bills, and now the next 8 days you're completely in the profit zone, why did you shut down? I mean, if you'd have gone back those 4 days and worked gosh darn Fridays, how much that would have dropped to the bottom line? Hell, if you're in the profit zone, you should have stayed up on Saturdays. Hell, if you're in the profit zone, I'd have stayed up on Sundays. I'd have worked all day. So, and, when dentists tell me they have 80% profit margin, they work 16 days or, 70% overhead, and they're sitting there working 16 days, that's amazing. I mean, you sit there and work 12 days, pay all the bills. Then once you start making money, you're only open 4 days and you close it down. I mean, you're just not thinking. Southwest Airlines. Herb Kelleher, go on to this deal and stay here for a while as they see these benchmarks. Herb Kelleher is the only one that made a profit in the airlines last 40 quarters in a row. And I think dental offices and Southwest Airlines have a lot in common because pilots actually make about $3,000 a year more than dentists. We have very expensive hygienists. They have very expensive flight attendants. We got reservation clerks. They got reservation clerks, baggage handling, the whole 9 yards. It's an extremely similar industry. Well, Herb Kelleher was the only one who could make a real yardstick. The reason this guy kicked butt is because he got control of real yardsticks. Like when other management teams thought that the customers were basically picking their flights based on that they had better food, they had chicken and lasagna, he realized, hell, there isn't a person in the world that asks what the hell they're going to have for dinner. He heard every eight. Remember billionaires? They keep their eye on people, their eye on cost. Herb Kelleher's listening, and all he heard was, well, how much does that flight cost? Okay, Delta. Then you hang up the phone, they say, well, honey, check with American. Okay, American, how much that cost? Okay, honey, check Eastern. He never heard anybody call up Delta and say, what will you be serving for dinner on Friday night's flight from Dallas, Texas to Houston? Nobody cares. It's cost, 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 cost. No one cares that your flight attendant's in high heel shoes or looks professional. He has his eye on real yardsticks. It was only cost. And this guy makes a ton of money. What did he make in 1997? Over $300 million in profit. Well, today's dental income, we're not there. But basically, what he did is he broke his costs into real yardsticks. So what he did is he took operating revenue per available seat mile. So what he did is he sat there and said, well, let's divide our revenue per available seat in an airplane that we could fly. So when you divide out all the revenue divided by all the seats in a 737 times all the miles they've flown, he sits there and says, well, here's the benchmark. We actually only collect about 8.58 pennies for every mile a seat flies. See, that's a real yardstick that he can start benchmarking off of. Today's dental, what we do is we sit there and divide the treatment hour revenue divided by the number of operatories times the number of hours in a month. Well, I'll show you that a little bit later. So then he does expenses per seat mile. So he says, well, we had about 8.5 cents of revenue per mile, and we had 7.4 cents of expenses per airplane seat mile flown. So basically, we're doing the same thing. So basically, it gets you a profit. When you start coming back to your staff and saying, did you know, those should be dollar signs, did you know an operatory only makes $7 of profit per hour, but that's 8 ops, 24 hours a day, 168 hours in a month. And that way you can start really squeezing cost out by utilizing yourself. For instance, Southwest Airlines net margin. Southwest Airlines net margin is 8.3%. Figure these margins for your thing. Passenger load factor. Here's what I'm getting to. Okay, Southwest Airlines load factor in 1993 to now is fluctuating about 63%. What does that mean? That means on any given day, 40% of the seats were empty. And you'll sit there and say, but I flew in Southwest and it's packed. Yeah, maybe at an opportune time, but he's got the highest percentage load factor, and he's only at 63% of the time. Look how pathetic today's dental is. Actually, the numbers are wrong. Our load factor is actually 35%, which means 65% of the time our chairs are empty. Hell, they're empty from 7 p.m. till 7 in the next morning. They're all empty all day long Sunday. And this starts, Southwest starts, he also tracks the hours and minutes per day that his planes are being utilized. Here he's been in business for 25 years, since I think it was 1976 is when that guy went public. And here it is, the year 2000, 24 years later, he's only able to keep his $50 million 737s in the air on average 11 hours and 12 minutes a day, which means that $50 million plane is laid to waste 12 hours of every 24-hour day. Herb Keller says, I wouldn't have to buy another airplane. I would have to buy one. I could double the size of my fleet if I just flew my existing planes the other 12 hours. But the nighttime flight business is not really developed yet. Same thing with your available treatment rooms. Someone went back in the PowerPoint and just took Herb's numbers and plugged them into mine, so disregard all these numbers for today's dentals on these. Same thing, available treatment rooms. I mean, I'm figuring our load factor on a room averages, I think it's something like 8 hours and 30 minutes. His fleet size is 261 planes. Our operatories were up to 8 chairs. So, but it's not we're going to be publicly traded. It's not we're going public. It's not we're franchising. I'm trying to benchmark and saying, look, Warren Buffett's a billionaire investment. Maybe I should invest like Warren Buffett to what I can. Herb Kelleher is the #1 person that went into an industry that was all based on traditions, philosophies, religions, customs, artificial fairy tale yardsticks, and went in amongst all that myth and garbage and trash, put in some real yardsticks. And here's his available seat miles, 44 million seat miles flown last year, and we're doing that. Well, and another thing I want to show is our wage-weighted profit sharing. Let's all grow the pie. Today's dental start of the year, say with 18,428 profit for the month of January. Dr. Farran bet that if he gave back half the profit each month in the form of profit sharing, then all 30 employees would act like entrepreneurs within our today's dental entrepreneurship. You work smarter, more efficiently, reduce expenses, half yours. Dr. Farran bet half his pie that if he did profit sharing for everyone at today's dental, the pie would grow back so fast that within 1 year, Dr. Farran's one half would be back to the equivalent of the original pie. So when I started wage-weighted profit sharing, the pie was $18,428. I gave $9,214 back to the staff, weighted on how much their payroll was. And I figured if that would give the incentives, remember economic theory, we make decisions based on incentives. The decision making is based on how we see the score. I see the score. What play should I do? Well, I have to make a decision. What play? Am I going to run? Am I going to pass? Am I going to punt? What am I going to do? Well, why should I even care? Because there's an incentive. It's not a Super Bowl trophy. It's a zillions of dollars. I bet if I did that, the pie would double in size, and not only would my half grow back to the original size to be bigger. When I started wage-weighting profit sharing, I cut my profit in half. How long would you guess it took for the pie to double in size so that the half I gave up, so that the pie I started with was mine? Or as Stephen Covey would say, thinking in abundancy instead of thinking scarcity. How long would you guys guess? 6 months? What do you guess, Mark? First month. Everybody started. Hell, they went and drained the account receivables. You sit there, everybody who starts working collections, you should have seen checking out a patient or a patient coming in and forgot their checkbook. When they're all hourly, you come in and say, I forgot my checkbook. They're like, I don't care. I get $10 an hour no matter what happens. Go to the damn grocery store and tell them you forgot your checkbook. They say, go home and get it. And I'm nuts because they'll get fired. Man, you put in wage-weighted profit sharing. My God, they come in, they say, oh, damn, I forgot my checkbook. And your reception there, so would you like to reschedule, or do you want to go back and get it, or someone at your house, or how do you want to handle this? And they're looking at you like, what, are you serious? Are you serious? Oh, damn, I just remembered. I think I might have put it in my purse. Boom, right there, okay? These people are jerking your chain. Your employees don't care. And remember, grow the pie. Think abundancy. Stephen Covey. Here's your profit right now. after you've paid yourself opportunity costs. And by the way, if you don't think you should be paid 25% of the dentistry, so you say your area is 30%, 35%, it doesn't matter. Just separate your replacement costs and profit so you can have profit sharing. And, you know, if you just drive production, the costs seem to always follow. And I've seen dentists making the same profit at any level of production. Once you go to profit sharing, the staff starts driving down costs. They start driving up collections. You start thinking like entrepreneurs within your entrepreneurship. And I mean, they just start kicking butt. But it's got to come with a list of the checks, how much each one's for, you know, your Cox communication bill, $75, your phone bill. And they start saying things like, well, why the hell is our phone bill this much money? Well, why the hell are we paying that guy $250 to mow the yard? Gosh darn, our yard's about 8 feet by. I'll bring some hand trizzers. Why are we paying this, that, this, that? Your staff starts really getting to think like you. No one leaves the air conditioner on. No one wastes. Everybody collects money. They squeeze in emergencies. They think like you do because they have an incentive, and they see the open score. And it's just so obvious. I mean, I have never done anything in today's dental that would require you to have more than a room temperature IQ in Siberia. I don't know why this is unique information. You got to have a chart of accounts, okay? You got to have an account ID for your checking accounts, your savings account, your employee advance, your dental equipment, and this stuff has to be open. Staff has to see all this stuff. If you think you're pulling something over by keeping your employees in the dark, go back to Europe when the Catholic Church had 98% of the market, and now they're down to less than 50% because every Protestant, Lutheran, Baptist, you name it, were sitting there as a Reformation protesting against these churches that wouldn't face their people. They would speak in Latin. They would keep them in the dark. Today, it's the era of knowledge-based employees, okay? If you would give your staff the open checkbook, all the accounts, and give them a percent of profit. I don't care if you just gave them 10% of profit sharing. If you refuse to give them any form of the profit, they'll never have an incentive, and every economist in the world will tell you you are going nowhere. You're going to be a lion tamer, and if you're not standing there whipping the lions, the minute you leave, they all break out a bong and call their boyfriend, and no one cares, okay? So if you want them to think like you got to get an incentive to you. Why do you go to continuing education? You know, what I talked to you about when you go to continuing ed. You know, the average lecture I do, it's about 300 people, 200 of it's staff, 100 of it's doctors. Those 200 staff are with 1/3 of the doctors. 2/3 doctors there alone. Their staff doesn't care. It's a job. All they do is sit around and watch the clock. I got an emergency call. You're back there. They'll say, if it's really a tooth, I don't know if we can get you in, because they're sitting there thinking, oh my gosh, if I had you in now, you're going to make me run late. All I'm worried about is I want to get home by 7 because I want to pick up my little boy from the babysitter, and I want to do this, this, and this. She don't care about your business. But the minute you give her a percent of the profit, she thinks like you do. She makes high quality decisions. Why can't you figure this out? And when you listen to speakers sit there and say, oh, 401ks don't care. Your staff just wants a different job every year. These are dysfunctional, non-healthy organisms. These aren't consultants. They're diseased people, okay? All people are the same. There's no racism. The only racism or nationalism in the world is that all people will act the same in the same environment unless they have some type of mental pathology or listen to Al Gore. Today's dental charts of accounts, hygiene wages, just go through there, show everybody the chart of accounts, just get everybody on the same score. If you can get everybody looking at the same score, and on your soft net reports, break these 40 reports up. Don't wear all the hats. Everybody asks me, they always say to me, they say, Howard, how do you have the time, the energy to get everything done? Because all I do is I focus on it and see how it needs to be done the first time. And then I design the system. I type it out in WordPerfect. I assign this task to not Jane or Jill or Jack. I sit there and say, okay, this would be from the insurance coordinator's job description. This would be the front office greeter. This would be the office managers. This would be the head dental assistant. This would be dental assistant number 2, dental assistant number 3. This one would be what the head hygienist does. This is what dental hygienist 2 does, 3 does. This would be what the head dentist does. I just focus, design the system, delegate it, never do it again. Ray Kroc's dad. Who do you think's in there making your goddamn Big Mac? You think Ray Kroc's back there in the kitchen? You think it's his ghost? Who do you think's making it? His system. I can get so much done because all I do is once I figure out how it's going to be done, I don't do it anymore. It's like I don't mow my yard. I mowed my yard one time. I decided how I want it done. I never did it again, okay? Same thing loading the dishwasher. I did that one time. I think I did it one time, and I decided that how I want it done. I got it made. They get it done. Just keep leveraging. The DuPont formula. Net income over sales is profit margin. Sales over your assets is turnover. Assets, what you control, over the equity which you own into it, tells you your leverage, how much you're mortgaged, okay? Well, sales over assets, when you bring another associate in your office, say they do another $20,000 a month. They're doing $20,000 more a month out of the same gosh darn asset. It'd be like if you went to your house and moved another family in there. You cut the house cost per family in half. So double your turnover rate. If you go net income over sales times assets, you cross out sales straight across, you get net income over assets. That's return on asset. That's a neat little deal. That's you're buying a dental office. What are you going to make? What's your return on this asset? But more importantly is if you borrow money, net income over sales, sales over assets. So sales cross out across. Now assets over equity, the assets crosses out. Now we're down to net income over equity, and that is the final benchmark. And let me tell you something, all the billionaires only have one thing in common. Somewhere between age 30 and 35, they found themselves in a place where they had a couple $1,000, and they kept the return on equity at 20% for maybe 10 or 20 years. If you can set your goal that your return on equity is going to be 20%, and you just hold it there, just for 20 years, you're a billionaire, okay? It's only been done 200 times, so it's a good little healthy goal. You know what I mean? I'm sure you can do it. Just hold it right there. But when you tell me that you deal with an accountant and you had your dental office for 10 years and you don't know what your return on equity is and you're going through your reports and you can't even find it, think about what's going on. You're giving an accountant $300 a month, and he has no incentive for you to learn anything, because if you knew anything, you wouldn't need that dumbass, okay? So what happens? You're yelling at your wife, you don't have any money, you don't know where your cash is, and you got an accountant who gives you everything in Latin and Greek. This goes back to pre-14th century Europe, where the priests face the altar. Oh, honey, I think the accountant's here. He's got incense. He's speaking Latin and Greek. He gives his report. We read Latin and Greek. We feel more stupid after we read it than before, so now we rely on you even more. It's kind of like the inner city. No matter how far down the Democrats screw them, they rely on the Democrats even more because they've lost sight of the whole picture, okay? So what you need to do is you need to realize that you have to do your own math. And what you do is you get a bookkeeper to come to your office. Forget these accountants. Accountants have all the incentives in the world to keep you in Latin and Greek, and they do a great job of it. I would say 95 to 99% of all dentists can't read their own balance sheet or their own statement of income. They've been getting it from the same idiot for 10 years. It's like, idiot. If you have no idea what's going on in your business, who's your accountant? That guy. Kill him. Stick an ice pick in his head, okay? Bring in a bookkeeper for $10 or $13 or $14 an hour. Get rid of your accountant and bring in a bookkeeper. I don't care if she even comes in one day. You get your bills, you get the statement, you pay the bill. Well, you never logged in this data into a computer. So now we can't track it. You have to log in your payables so you have an account payable so you can look at your payables over the years and build reason out of this data. You can't just write a check and give it to your accountant. And then not only that, you don't even have any electronic digital means to recall this information. I'll ask for a bunch of data. Your damn wife's crawling up in the garage or going out to some storage dump, bringing a box of crap. I mean, it looks like the Flintstones when I go into your office. That's why I don't do in-office consulting. How would it take me 10 weeks just to find out what I need to know? And I ask my good friends, and most of them don't confide in me or tell me what they're really thinking, but Sally McKinsey, the only one told the truth. I say, Sally, how do you make a diagnosis? I mean, you go in there, you don't have any damn data. She just laughs. She goes, I know. You just try to get a feel. You just try to pretty much feel words. You got to get a feeling. It's intuitive because no one in the world could. I mean, when a major consulting firm goes into the Fortune 500, all the data is electronically, and consultants pour over it for months to figure out where they are. You don't even have receipts. So what you do is you bring in a bookkeeper. The bookkeeper comes in. When you get your bills, you enter it. Use Peachtree. And why would you even aim at Quicken? That's over the counter. Microsoft Money. I mean, I can't believe that's. Well, actually, the reason it's so crappy is because Bill Gates wanted to buy Quicken, but the goddamn government got in, won't let him. They blocked that purchase. But Peachtree is aiming high. So what you do is say you do $20,000 a month to $50,000 a month. Get some, preferably older. You know what's really great is you find a little, there's a lid for every pot, okay? And there's probably a bookkeeper that's a bookkeeper for 10 years. She's really good, and she decided to have a baby or stay home. Or maybe she retired, she's a grandma. There's always someone looking to just work one day a week. And don't try to find this person an hour or a day. Shop around until you get the right person and sit there and say, okay, here's my right person. She's going to come in my office. I'm not outsourcing accounting anymore. That's like when you get sick. Oh, I have a headache. Honey, will you cut my head off and UPS it to the doctor? Okay, refer out anything but your accounting. And this bookkeeper comes to your office every Monday. You put all the bills there, and she enters all the payables. She pays all the bills. You sign all the checks, and you generate your own reports, because she's going to ask you 49,000 questions, and you're going to personally start taking an interest in there, and she starts merging that with your soft dent reports, which hopefully I'm about this close of convincing either John Miles of Dent Supply or Stan Bergman of Henry Schein, Larry Gibson, their head programmer, or Pete Frechette, who owns Patterson, who's EagleSoft and FCAM, to merge the Peachtree Accounting with their software, so this can all be done automatically for you, as if you bought a McDonald's franchise or a Subway franchise or a KFC franchise or a Taco Bell. And if you guys don't want to do it, if you guys want this type of data faster and faster, just get on the phone and call him. Say, I just listened to Howard Farran. He tells me you don't think the market's here, that they're not sophisticated enough, and let him know your vote, that you're here, you're ready. And you'll start getting better data. Remember, there's 24 hours in a day, 160 hours a week, 66 hours in a year. You work 2,080 hours a year. You sleep 2,900 hours a year. So that's 5,000 hours of work and sleep. That means you still have 3,764 hours to sit around, continuing ed, reading 10K annual reports, and reading all 40 of your software reports, all your Peachtree reports, until you get a good grasp of your cost. Now, here's another way to look at this. Okay, I have 8 operatories. So if I have 8 operatories, that means I have 193 treatment room hours available per day. If I have 8 operatories, that means I have 1,344 treatment room hours available in a week. On a 28-day month, I have 5,376 treatment room hours available. On a 30-day month, for them, I have 5,760 treatment room hours available in a month. And on 7 months with 31 days, I have 5,952 treatment hours a month. Now, on the average 31-day month, we're using our treatment rooms about 2,000 hours. So what does that tell you? That means there's almost 6,000 treatment room hours available in a month. Well, actually, for every operatory, I'll just say this. For every operatory, you'd have 24 operatory hours available per month. For every operatory, you'd have 168 operatory hours available in a week. On a 28-day month, you'd have 672 operatory hours available in a 20-day month, 720 operatory hours available in a 30-day month, and 744 operatory hours available in a 31-day month for each room. So if you got 2 ops, just take, just take that times 2. So it's 24 for a day, 168 for a week, 672 for a 28-day month, 1 February, 720 for a 30-day month, 4 of them, 744 for a 31-day month. So then when my dentist and hygienist are saying, Dr. Farran, we need you to take profits and add a couple more rooms, then I come back and go, really? Well, today's dental has 5,952 treatment room hours available in a month, and last month we used 2,000 of them. So instead of asking me to go get my money and build more operatories, we don't use the operatories we got 7 out of every 10 hours. That means a person go in there and use them free. Hell, we paid for them and only used them 2,500 hours. So, think in terms like this, and you can start squeezing out costs. This is how Herb Kelleher did it. We track treatment room hours available for 24-hour day, for 7-day week. The 30-day months are basically April, June, September, November. Okay, I hate February the most. I mean, February, I hate it. There's always less profit in February. April, June, September, November, they suck also. My favorite months are January, March, May, July, August, October, December. You know why? Because I get an extra day of profit. So how do you try to work around this? What you try to do is, since you can't go the rest of your life saying that February sucks and you don't like April, June, September, November, and that these are your favorite months, because it doesn't matter anyway. People have asked me, they say, well, do you really think the world should have a 13th month? So you have 13 months, each with 28 days? And I say no, because even if you got the calendar right, you still got all these weird religious holidays, Hanukkah, Christmas, Easter, Thanksgiving, trick or treat, whatever the hell that's about. So what I do is I just try to set a steady goal so we don't have the variance. I want to be tight. I want to be consistent. So what I did is I tracked, okay, here's the average days of the month. Then I sit there and I figured out my variance, my standard deviation, and I did the math. And you can go back there and look at that if you're real anal. And basically, it turns out that our goal for today's dental is 25 days a month. How do we do that? Well, January, we're closed New Year's Day. So even though it's a 31-day month, there's New Year's Day. There's no holidays in February, thank God. I mean, it's only 28 days. You know, and, I'm surprised in America, you didn't have Christmas and Easter in that month. But, staff, when I see you in February going somewhere for a week's dental convention, I'm wondering, what are you thinking? I mean, that convention costs you so much more. I mean, that wasn't a 31-day month. And so what you do is March is 31 days, no holidays. Then there's Memorial Day, 4th of July, Labor Day, Thanksgiving usually wipes out. In our office, just one. We come back and work Friday and Saturday. Christmas Eve's half a day, Christmas a whole day, New Year's Eve's a half day. But what we try to do is we figure all that out, and we come back with an average. So today's dental, there's 365.25 days a year. That 0.25's, remember, every fourth year is a leap year. February has 29 days every fourth year. There's 30.44 days per average month. There's 52.18 Sundays per year. 7 most common holidays in the U.S. are New Year's, Memorial Day, 4th of July, Labor Day, Thanksgiving, Christmas Eve, New Year's. So that gives me 306.25 days per average workable year. And you divide that out, and the mean is 25.52 workable days per month. Work should be a passionate hobby that you happen to get paid for. Okay, so what we do with all this, do your math, do your variance, do your standard deviation. You can figure this on a quarterly. We work... we basically try to work 76 days a quarter. We're very, very steady. That way we don't have fluctuations. And it also gets us, if we average for 25 and a half days per work days per month, people are getting very nervous on February. No one in my office would ever say, hey, can we close down for 5 days in February? We just took our cruise when we take it. Notice we took it in March. Okay, we wouldn't take, it gets me very steady. And here's what it looks like. Again, doing the variance, I know it's very anal for some people, but basically it's the only way I can have fluctuations. You're always calling me up suicidal because you took 2 weeks off in July and want to know why you lost money for the month in July. Because you don't have a budget. Remember, it's price minus profit equals budget. You've always been cost plus profit equals price, and you always wing every month. You've never had a budget. You know it. That's why you fight with your wife. That's why you fight with your office manager. That's why you're demoralized, and that's why you're on your third wife. I would rather be vaguely right than precisely wrong. Okay? Everything we do in our today's dental is absolutely anal. In fact, you know what I've done even? This shows you I know, man. There's softwares for calendars. I've even got our calendar mapped out of which days we're open and closed 100 years in advance because it's all automatic. So the staff wants to know when they come here to work, by the way, here's days we'll be closed next 100 years. So don't come back a week from now and tell me you didn't know we were going to be closed. And then, it tells us 8 treatment rooms available per 28-day month. It gives us 5,376 treatment room hours available on and there's for your 1. There's for my 8 for a 30-day month. It's 5,760. There's for your 1. I mean, I don't mean that you have 1 chair. Just that if you have 3 chairs, just take that number times 3. There's my 8 treatment room hours available for a 31-day month. Gives me 5,952. And there's everything we're looking at right there. 25.52 workable days per average month, 7 holidays a year, and yada, yada, yada. So after I save this tape for last, that way you'll know, now you know you'll never want to be like me because I'm just too gosh darn anal. And remember, last but not least, you got an associate who wants to make more money. They'll sit there and say, well, I can go down the street and make 40%. Go down the street. You'll be back in a year, okay? Associates, number one way you can make a hell of a lot more money, work more hours. Dentist, same thing. If you're suffering a setback from a bad investment, just start working 5-6 days a week, because there's also a massive psychological component. You know what happens on a 3-day weekend? Well, you're a doctor, so you know you got to go out to eat. You know you need a new car. You know your car's got 8,000 miles on it. What do? Friday you play golf. That's $150. By the time Sunday comes around, you're so damn bored, you go out and spend $1,000. The one thing I've noticed is that when I got out of school, $86,000 in student loans. Wife bought a $100,000 house. I had a $100,000 loan from dental office. From Valley National Bank one. Dad never gave me a dime, never co-signed. $300,000 in debt. My God, if I wasn't working, I was home coughing up blood in a toilet. My wife, she had 4 kids. I think it was in 3 days and 2 minutes. And what I just worked from 7 a.m. to 10 p.m. all day, every day, until I was completely debt-free, had a lot of cash. And as soon as you have a lot of, and that's another thing I noticed, if you don't have a dime, you always are stressed, so you use credit, you use debt, and you spend money. And then when you work your brains off and get out of debt and have a bunch of money, you don't want to spend it. I don't know what I want to buy. What the hell do I want to buy? I don't want to spend a dime. My wife's in charge of all that. She spends all the goddamn money. So just work hard, do your own math, shoot your accountant, bring in a bookkeeper. I need that internal. Get into this game. This game is more fun than you'll ever realize. If you had 1/2 as much fun as I did today, you had a very fun day. Thank you for another day.